This is my, I need to have another changer.
Bring
Bring this, tell me,
I didn't watch that.
flip over. This side.
All right.
Okay,
Hope everyone got their food. You can just continue to eat, but just there's gonna be a lot of information. This is Josie Lynn, CCIM from Houston, Texas. She's a broker, developer. We call her Mama Goose, you know, she takes care of everyone, and just proud to appreciate her coming up to Dallas to share the opportunities that, you know, that it's very hard to find these type of opportunities where she's sharing in her development where everyone can participate. So this is a great way to invest. If you have investors later on that want to take a look, but really she wanted to kind of share to the group about this opportunity. So Josie, I mean, there's a lot of information about Josie as well, just to go through, but you know, just know that she is an experienced broker for many, many years. She's developed part of Katy Asia Town. This is the project she'll be talking about. She has other projects in the pipeline as well, but just, you know, take it away.
yes, I have a multiple projects. But anyway, I think is there anyone being in Houston with the WeBus?
WeBus.
Yeah, I think a couple of you came to Houston. So I came here, feel home, and I believe you came to my place, feel home as well. So that's another hub for you guys to come in. Okay. Today I want to share with you, I want you to earn double by leading, not just selling. So is there any one of you doesn't think you are not a sales? Do you agree you are a sales? You are not sales? Okay. So how do you define yourself?
I'm an educator, so I like educate people, and from there, you know, they get something from me, like need me to help them to sell and buy, but I don't think that I'm a sales agent. I don't want to be
Okay.
a sales agent.
I think the key about people are thinking about a lot of people doesn't like the words of the sales, but actually sales is the key of today's economics. Even you try to educate other people, you are selling your knowledge to others. Mm-hmm. So the key is, you know, we have to accept who we are. We are sales. Honestly, we are educated sales, professional sales, because a lot of people talking about sales, they feel like a car sales, but it's different. Okay, we have our own knowledge base. But however, this is the topic, you know, I really love the topic here because I put a lot of words into the ChatGPT and then they came up with this, not me, all right? So I want you to be a project principal, not just an agent. So I want to share with you how you can have a chance to make more. Okay, I believe you might have my other picture. Those look too young, so that's why I show you this one. If there is anyone have my WeChat, you will see that. And this one, and I just steal the image of Calvin. Where's Calvin? I want to show him as well. All right, we both of us are icon agents. So this is my location. I have one office in Houston, one office in Katy, and I'm part of the Katy Asian Towns concept developer and also promoter and also principal. And this is my QR code, my website. You can look at who I am. Okay. So I want to share with you, because you are thinking about why Daniel brings somebody I don't even know. So I want you to get some idea. And also why real estate. I think a lot of people who came to you because they are ready to buy real estate. But actually, we probably doesn't really know what's our strengths of a real estate. Why invest in real estate? And the benefit of investing in real estate, you have a five category there. So one time, if your client say, hey, can I put in the CD? Or I have to put in the real estate. And this is a very good chart I want to share with you, because real estate, you have a high cash yield, equity build up, leverage, because your $1 can be $4 can use as a $4, and then you have a hard asset tangible. So it's not like a stock. Stock can be a wallpaper, right? So, and tax advantage, we can have our depreciation and we can get a tax benefit. So investment is very important. I love this kind of little graph because this little graph showing us we have to put money in, and it's kind of like a planning. And then you can get the fruit, right? So this is what I want to share with you. Okay, there are 4 types of real estate. You can interrupt me anytime if you have a question, but I would say this is major. Okay, let me tell you, I used to own 2 RE/MAX office in Houston, but I love my brother here, so that's why I'm here as well. And I want to share with you because I do a lot of class with my agent before. So I pretty much bringing a kind of overview to you to understand what's the full picture. Because when you are showing house, you only see, oh, how good is this house? Then you will think about, oh, this is a good, like a school district, blah, blah, blah. But you don't know why people are buying that. They are in their deep mind. What is that? However, this is 4 type of a real estate investment. Did I miss anything here? First of all, most of your client probably will buy residential. And right now, can we buy something $350,000 in dollars and make the return rate, net return rate of a 4%? I'm not dollars specialist, so I don't know.
Awesome.
Possible? Okay. So liability is 100%. Is there any one of you are investor owning the residential property?
Yeah.
I believe so, right? So did you get a phone call from your tenant say, oh my gosh, my toilet cannot work, okay? Or roof. I used to own 10 residential property in Houston, and I learned my game. And I also manage about like 100 houses in Houston. So I know the pain. So I want to share with you, this is residential. Most of our clients buying residentials. So if we want to buy 350,000 residential, how much do we need to get the down payment? 25%. What is that? About 100,000, right? So the second one is commercial. I think a lot of people been dreaming about getting into the commercial. So what is the index of a commercial? When you buy commercial property, what is the index? How you refer the commercial property, is that good or not? Cap rate. Cap rate. So now I'm talking about the cap rate about 6%. Is 6% common or not common? Yeah, right? So 6%. So you are sole ownership. So if you buy $3 million commercial property, how much you need to prepare for your down payment?
30%.
Yeah, 30%. So when you are so you still have 100% liability. And this is the one I want to share with you called commercial development. Right now we are doing the equity partnership. And this equity partnership can be 15% up, and you have limited liability. If somebody, you feel free to ask me question later. Because I have all the like a detailed layout here. And also REITs. What's the difference about the REITs compared to the rest of them? Yeah, they're stocks. So they can be wallpaper, right? So the beauty of it is every penny for the previous 3 of them is attached your name on it. Am I right? So it's tangible, it's salvageable. So if there's anything happen, for example, somebody burn something, and then you still get insurance, right? Okay, so let me put the next one. This is the residential property. I want to do a math with you. And I think when you are showing your client, I will recommend you to do your own math for the investment property. This is in Houston's one of the top neighborhood with good school, this price range, this is 528,000. This is like a low range. The start from. So right now we have a tenant who is leasing for 3,250 per month. This is long-term tenant. He has been living there for almost like 9 years, never moved. Okay, so the gross yearly operating income, I'm not putting anything about, like a commission or something. I don't do any commission side. I only share with you, this is the 3,250 times 12 is 39,000, right? And then property tax, this is our property tax, annual insurance, HOA fee. Then annual operation expense is about 15,000. Annual NOI, net operation income is about like 24,000, right? So if we are cash on cash, see, we have a yield 4%. That's a very similar to what I just said. But you are not predict what is going to come. For example, the roof have some problem or whatever. However, this is gross, not really NOI yet. But if we do financing, oh my gosh, I put loan amount is 30 years, 6.5%. Is that realistic? Judy, is this realistic? Low, still low? I'm sorry. So anyway, I do this. So you have like a 39, this is like a loan amount is like, I'm sorry, up. This is the loan amount. Then cash return, I deducted everything. Cash return is minus 5,900. And then cash return is minus 4.52. So if we do loan, you have to pay from your pocket. And then, but you have a principal reduction. So actually you are going to have your like a ROI is minus 1%. It's not too bad. But this is the residential side. But what if the air condition gone? How many months you could kind of like let go? Probably 2 months at least. Am I right? So I just want to bring you to the realistic side. This is the real number. And does that too exaggerate, or does that almost like a correct? Yeah, right? Makes sense. Okay. So now we are comparing residential and commercial. So there's a six key point I want to share with you. One is a required fund, residential rentals. Remember we talked about $350,000, we put 25%, that is 100,000. Is for about $400,000 house. Commercial for $3 million $3 million property, we put 750. So for required fund part, residential is more friendly. So I put a check there. Turnover, residential rental is every 1 to 2 years. And commercial income property, usually 5 years lease term. Okay. Then operation and maintenance, residential, landlord's responsibility, yes. Okay. But commercial is tenant's responsibility. Is there anybody having question about that? Because I don't know how deep you understand about residential and commercial. So if you have a question, just feel free to raise your hand. I can explain more. And higher rent, yes, definitely. Residential, because restricted by the market. Why? If the neighborhood, they have a 3,000 square feet, they are leasing 2,500. How much are you going to lease? 2,500. Probably aggressively, you probably a little bit aggressive for 2,600. Or most of the people will do 2,400. Am I right? Okay. So your rent is obviously is going to be like a impact by the neighborhood, right? Commercial income usually dominate by area. For example, I want to be in the shadow center of Costco. So So you know what? They ask for $40 per square foot. I have to pay it because I want to have that kind of like a traffic. So that's dominated by the area. So this actually, good example of a location, right? But predictable income, I don't know if you really if you agree with that, but I can tell you commercial income property, it's predictable. Because why is predictable? Because you are triple net. Usually it's base rent plus triple net charge. So it's predictable. So that's why, like Judy is a professional in the lending side. Is residential is recourse, non-recourse? What is the difference? I mean, the residential, are they recourse? Yes. Okay, what's the difference between that? Can you help me to?
Difference between residential and commercial.
No, I mean recourse and non-recourse.
Recourse, is the collateral. And you have to have a property or something that is a collateral, so it's a recourse. Anything that you don't pay, that is gonna come back on the lien on the house.
Mhm.
And then non-recourse is like, there's no collateral, but with higher interest rates.
Yeah, but the commercial wise, is the commercial property is a recourse or non-recourse?
A commercial is non-recourse, it's personal guarantee, but still it's non-recourse.
Okay, so the difference is when you do the residential lending, you do the borrowing, you have to qualify. For example, you make like $100,000 per month, per year, and then how much they can qualify for the loan? 300, right? But even you make $100,000 a year, but you want to buy 3 million, you have a down payment, you got a good rental income, you still can qualify. Am I right?
Mhm.
Yeah. So that's why this is predictable income. Okay, I want to share with you how nice commercial can bring you to the different level. And then resale value, residential, same thing like a higher rent side. Because the residential side, if somebody sell the property for $250 per square foot in the neighborhood, are you going to be able to sell like a $300? You have a comp, right? But commercial, we barely do real comp. The comp, it doesn't really affect us. The commercial, it's affected by the, by the income, by the, by the cap rate. So it's on the seller's description. Because why? If I want to sell you the commercial, you say, hey, next door only sells $300 per square foot. Why don't you sell me? Come on, I'm selling you my, my money-making machine. I name the price. Unless I'm desperate. Otherwise, I name the price. So that's the beauty of it. Okay, this is the part. Tell me which part you don't agree with me. First of all, the real estate agent is a licensed professional represent buyer and seller in the real estate transaction. So this is our professional side. That's meaning we have a knowledge, right? So here, the business model, are we on call? Yes, right? I actually feel like a real estate agent actually is kind of like a taxi driver. When they wave you, I come. Am I right?
Yeah.
Yeah. I'm just telling you the fact. We don't need to have a sugar coating. We just tell you because in this room, most of you know what we do a lot of dirty job for our client. For example, they say, hey, can you help me to register my kids in the school or whatever? And can you help me to find a plumber? Whatever. Okay. So listing agent, your compensation, you have a 3 type of agent, role. One is listing agents, 1 to 3%. I'm sorry, that's the percentage. I think the typo. Selling agent, 2 to 3%. Listing agent, 1 to 3%. I think a lot of people experience that because we want to have our site there for advertisement. Right? So selling agent, 2 to 3%, especially now we have an NARs. like a lawsuit. I think everybody knows that in the future, all the buyer's agent need to ask, hey, I need to negotiate with you. How much are you going to pay me? Because if this case stand, we are going to have a trouble. Okay? Then intermediary, that's a very rare and also very risky, 4 to 6%. So I think this is a very common practice. Business generation, how did you generate your business? Word of mouth, referral. Okay, so solicitation, you're marketing yourself. And then leverage by listing, that's attraction. Okay, tell me, which part you got more? For word of mouth? Okay, right? So still go back there, you are on call, right?
Yeah.
So we are just, and then we keep promoting ourselves. Hey, we are very good. We looks very professional and we go out to show people. Sorry, when I told people every time, before when I was younger, when I was an agent, I talk to my client, I show whatever I can and showing people how professional I am. When you are talking about your professionalism, actually you try to make yourself, seems like you are making yourself another feel like other people is not as professional as me, but actually not, professional. This is how I talked to my agent before. The professionalism, if somebody, it's not you to talk to clients, say, I'm very professional. That's wrong thing. Just like you talk to people, say, I'm beautiful. Professional, the word should come out from, should come out from the client, not you. Okay, that's the fact. Don't sugarcoat it. That's a very, because when you are getting in that kind of image, you will have a different type of attitude. That's not good. So, but think about that. Common tips in the restaurant. How much is that? 10 to 20%. Am I right? Okay. So it's not about the percentage. It's about expressing gratitude and acknowledging appreciation. We are making, you say, yeah, because the deal is so big. So we only get like a 1%, 2%, 3%. But obviously, we've been treated like we are, a lot of buyer and seller, they feel like, oh, because I don't want to deal with those craps. So I'm willing to give you that kind of money. They feel like, they give you, they give to you, they don't understand, they need your service. Most of the buyer might have that kind of mentality, right? So how can we make people respect us more? You need to make your uniqueness. Okay, this is what I want to share with you. This is garnish, sprinkles, topping, ice cream. This is our commission side. This is the tip. This is principle. Oh, sorry, there's a typo. Okay, do you agree with that? Are we? Right? So now we want to share with you your clientele. Home buyer, owner use is time consuming, right? You probably need to show a client for a long, long time. And then they finally make the decision. It's hard to focus because they feel like, I want 3,000 square feet or I want 2,500 square feet, whatever, they cannot. And also emotional, and also selling. So when you sell them, you don't want to have any kind of confrontation to them because you want to keep the relation. So you are in the serve mind. Okay, so here, one-time deal for several years. How many clients keep changing their house? 5 years, the average in the States, average year of a moving. Okay, more babysitting works to do. Am I right? You have to babysit them. When they want to talk to you, you need to pick up the phone. No matter how busy you are. Okay, so right now, investor side, faster than general home buying. Am I right? Okay, need to be approved deal. They have to find a deal. They feel this is a good deal, otherwise they won't buy. Okay, fact and number oriented. You have to show them a number. The cap rate 6%, 5%, 8%. Selling under professional analysis. That's so-called professional. Okay, you are not showing people wear the nice suit and go out and say, hey, I'm looks very nice and professional. No. The professional is showing on the fact. Okay, so this is the number. You need to learn the number. And then possibly repeating business. Yes. They have money, they keep buying. In 1 year, they probably buy 2, 3, 4. And then management request, they will say, hey, I want to buy. Can you help me to manage it? Right? So I think I point this out. Tell me which clientele you like most. You like investor or home buyer? Investor, raise your hand. Yes. So that's a simple part. Okay, we don't want to babysit anybody. Our life is so busy and also tough. Okay, so now if you have a lot of investor, we have to go back to the investor side. Think about how to help us to have the power of navigation, get the investor clientele. And actually, if you have something besides the what's your MOS called? Metrotex. Ours is HAR. So you can find something. A lot of people are looking for off market deal, right? So if you have something uniqueness, then that's good. You really standing out. No matter how bad your car is, no matter how you looks like, they still respect you because they chase for the deals. Am I right? So what is the return rate of investment of a commercial development can be? 15% and up, or even double or triple. If you want to learn more, you want to know the detailed number, I'm more than happy to share. Okay, but how can an individual investor with limited fund to participate in the commercial development project become a limited partner of the equity partnership? What is an equity partnership? If you are putting in the real, if the big project with the REITs, they call like it's kind of like a syndication, but we don't use that words in our private equity syndication. So this is the, equity partnership. And what is an equity partnership? An equity partnership is an agreement between individuals who pool their money in their capital, skills, and resource together. By doing this, the partnership has the potential to achieve greater revenue and business growth. So can you only have $100,000. Can you do like a $5 million deal? Yes. If you pull yourself into the equity partnership. Okay. This is my project. And how many of you have been in Houston and go to Katy Asian Town before? And this is, we have a couple of, and this is another landmark across. Right now, the orange dot is my project. And then I want you to become the project principal, not just an agent. Okay, and this is the University of Houston, just right across the street. So I need you to help me. Okay, I think Colin just have a video at the beginning of the year. Yes. Yes, please. Yes. That is my company. Across the street is University of Houston. Our anchor is HMR. And it's at the intersection of two highway. One is I-10, one is 99. Every day we generate almost like 320,000 cars, which is very fantastic of the commercial property. Those are two ground, two land. Those are part of the project. Okay, thank you. So my minimum, requirement of the investment is $550,000, and which is kind of hard for everyone. But I think we got a good creativity way. Okay, this is the highlight. It's 2-in-1 investment. The risk is diverse. One is 15 retail units. It's fully leased. 2 pad side, the 2 ground you just saw is ready for develop. Those you can make more money out of it. And then highlights, you have the this is the Houston's new landmark, an affordable commercial real estate investment, because what I'm talking about is $550,000. If you have a very good investor, they have a good pocket. $500,000 is not a big deal for today's market, but we want to benefit more for our agents and also for our, for your client. And this, we have a 2-part. One is stable rental income. Another one is ground up development. So we have a 2 type. So I want to, so now it's Carlos' turn to help us to explain something, because it's hard, right? To get a $550,000. So, but how can you reach that and then you still get benefits? Okay. Is that yours? Is this
This one right here.
Okay. Yes. I see here. There's the chair.
Yep. All right. Everybody can hear me? So my name is Carlos Coloma. I'm also CCIM, like Josie and like Daniel and Calvin. We're also part of the We Partners Network through our own organization, Let's Fly Crew. We're the fastest growing Spanish-speaking commercial and residential in the Metroplex, and hopefully in the rest of the state also. I partnered up with Josie in this deal because I went there, I visited, and I thought it was a great opportunity and a great project. I worked really hard with her presentation and the numbers that she had to find opportunities for normal people that don't have $550,000 just laying around, make it a little bit more affordable for all of us and be able to bring family and friends for an investment like this. So in general, just as a little overview of what the investment is, this is the entire Asian town area. What Josie is proposing is the purchase of that building that's already cash flowing and occupied, and those 2 pad sites over there that are going to be developed into more retail. Josie is working really hard at pre-leasing those spaces before they're built, and that way we know there's going to be an avenue of income coming later on. So the idea is she's raising $11 million, right? So if you think of it as a pie, you've got 20 pieces of pie, right? 20 slices. Each slice is $550,000, which is what she was talking about. So you would have 20 investors coming in with $550,000. If And that's what equals the 11 million that he's trying to raise. So what I proposed was, well, what if we divide each individual unit of 550,000 and we're able to bring in 10 junior partners to buy into one slice of a cake, right? So that's what I'm putting together. I'm putting together a junior partnership. So whereas she's putting together, she's looking for 20 partners at 550,000 to deal with 20 of them. I'm putting together a slice of the pie with 10 partners with about $55,000 each, which is something that you all can do also. If you're able to bring in partners, you can each buy a slice of the cake with 10 partners. That way she's still dealing with just 20 people total, right? As far as reporting to, while we are reporting to the people who we're bringing in under our slice. That's general terms, right? So when we look at the numbers, this is just part overall the project. The project budget is about $25 million project altogether, with a total purchase price of $20.3 million. The remainder, $5 million, is going to include reserves of about $1.6 million, as well as the cost of the construction of the pad site. So this is the overall big picture with a minimum investment of $550,000 for 5% of the share. Again, it's what we're looking at is a 5-year projected holding period with an estimated sales price of $37 million after the 5 years. When we dispose of it after 5 years, we're looking at the building that's already developed. It'd be a 5.5% cap rate. And the pad sites, once they're developed, we're estimating a 5% cap rate because they'll be brand new. There's a management share and split of 12% and 88% between the limited partners, which we can answer questions about later. These are the big numbers, which I'm not gonna delve into unless you really want to. You can take pictures of it for now, but this is something that if you guys want a more in detailed presentation, we can have that conversation later on. So I'm just gonna show you overall how the numbers and the structure will be. So I don't want to take too much of your time. Again, big pictures. We have we're looking at on the portfolio gross returns, total gains over 5 years.
2.34.
There you go. Let's see, here we go. The dividends over 5 years, 9th window will be 2.4 million, which is a 22% cash on cash, with an estimated return on investment of about $14 million, which is 134%.
This is before split.
This is before the split. This is the gross
So
return.
after split is about 106%. So that's meaning you are going to double your price, double your your investment.
Your investment. So yeah, of course, with the interest rates, things can vary. If we get a decrease of interest rates in the coming months, that's how the internal rate of return is going to vary. How we can actually increase our return, our overall return on investment.
So now the estimation is based on the current situation, which is could consider as the worst.
As the worst case
in the market right now. 7.5% is pretty low, pretty aggressive.
And then these are the portfolio net returns. Like this is like looking at if you were a limited partner, putting in $550,000. That's gonna be your total gains over 5 years will be 1.1 million. That would be your dividends. Your internal rate of return of 16.18%, which is an equity multiplier of 2.6. So that means you bring in 550,000, and in 5 years you are gonna be cashing out after your cash flows and cashing out after refinance or selling. You're gonna come out with 1.1 million. Now, looking at the junior partnership proposal, we've got the 550,000 that we need to buy that slice of the pie, right? But the true cost of the minimum partnership is about 573,000, because that also includes the formation costs and the reserves within our junior partnership structure, right? So our unit cost per investor is going to be about 57,000. Okay, so it's not really the 55,000 times 10, which is 550. The true cost is going to be about 57,000 per junior partner. So we could have, what I'm looking for is up to 30 partners. You know, I can have 3 slices of the cake, you know, for 15% of the total investment. I do need a minimum of 10, and I think I already got the 10, but if I can get more, we'll get more. And then me as a junior partner, I'm gonna be charging a management fee of 2% from all distributions. If you make your own junior partnership, you could do the same. You could be charging a small fee as well because you are managing it, right? Now, it's not
Deal
like,
with me.
right,
Not that, just deal with me.
you're dealing with her. There's really not much to manage because the entire project is run
Yes.
by her. You coming in as a limited partner on the overall picture, but you are the general partner of your small junior partnership. So there's not a lot of work to be done. Again, I'm just showing you my case and how it's structured, okay? So these are if we come in for 10 total units within that slice, which is a $573,000 investment, which is a 550,000 plus the additional fees. Our total gains over 5 years would be 1.1 million, which is an equity multiplier of 2, which is an annual internal rate of return of 15%, which is what most investors are looking for when they invest, about a 15% return. And then when we looked at 1 unit within our slice of the pie, so if you come in with a $57,000 investment, what's your return over the 5 years? So your total gains are going to be 112,000. That's what you're going to be cashing out in 5 years. You're going to be having cash flows every year, but overall, after the sales proceeds at the end of year 5, that's your total when you accumulate it. So that's a total cash on cash of about 54,000. So you came in with 57,325. You are going to cash out with about 54,064, which is a 95% cash on cash return investment. This is a chart that I put together. The yellow has all the numbers on
My
her
side.
deal, on her side. The bottom part is on our side, on the junior partnership level, okay? There may be, and the way I have it on Excel and I have the calculators is, well, what if within our junior partnership, one person decides to buy 2 units instead of 1, you know, so going for like $110,000 investment. So I can play with the numbers and it will show me exactly what it is, okay? And then this is where you get to see the combined performance summary. Again, the yellow is you go from the gross on the actual portfolio of hers, and then net per limited partner, 550,000 investment, and then the net limited partner unit, and then we get to the junior partnership level, the gross junior partners, what we're receiving, and then the net per junior partner, and then per junior partner unit. And that's where you look at what you see.
Any question?
Any questions so far? I know I went pretty fast, but
I do have a question.
yeah, of course.
So if now, I'm not involved in this one, but I have a investor that I can refer to you guys. So do I get anything from? that
Yeah,
referral?
later on, let me give this, I'm going to give you the number. The return, because we are here to share with you how you can double your how you can become a principal and double your income. So I will share with them.
So there's multiple ways. So I said, if you had, let's say you had 10 investors, right? We could,
Not including me.
right.
Okay.
I would say we could help you set up your own junior partnership, so you buy a slice of a cake, in the same way that I'm doing it. If you only have 2 or 3, send them my way, and I can put them under my structure, and I can get to 30, and then, yes, we can work out on
Referral.
referral.
Yeah.
So we have 20 people on the Zoom. One of the questions they had was, when is the deadline?
Okay, let me
Gonna
put
talk
this.
about that.
So is that okay?
Yeah.
Okay. The deadline, I actually want to get a commitment by the end of the months. Actually, let me put this way. What is the selling point for you? Actually, when you talk to people, hey, you only need to inject about 55,000, less than $600,000. You can participate 2.5 millions, no, 25 millions project. Do you like to, get this opportunity to learn more? I bet a lot of people will willing to take a look. But what can we do? Right now, I came up with another option called Class A, called Fixed Growth and Retreat. That's meaning every month I give you 6%. Every year I give you 6%. At the year 5, I am going to pay you 30%. And then I get everything back. Okay, so it's kind of like a loan, but actually you get more. And so the total return is 54 before the split. So later I will show you after split. And Class B, junior, joint venture partner is the way I recommend it. I want everybody to do the same thing, because you can get more. So that is only half return. This one you can get double. Okay. So, and, but you will ask me, is that for real? Yes, because at your word, in your word of a selling agent side, you only see the commission. You didn't really have a chance to really knowing the number from the upstream, development side. So I'm here to share with you more idea, but however, this is the beauty of it. So if you don't want to get your money out, we are doing like a 55. This one I estimate from, I do the calculation based on the the beginning of the year. So I want to share with you because I am doing the top 88% share. That's meaning I have the sway share for 12%. That's meaning you're $100 to me, you have to give me $12 to make me the navigate the whole thing, be liable for everything. So that is and usually for this type of syndication, they charge about 20%. That's the minimum. And I'm asking less because both sides are mine. So I want to benefit both sides. Okay. And right now, the referral return, if you don't want to take the money back, if you keep the money, if you don't want to take the cash out, you keep 3% out there. So this is 3%, you keep there. Okay. So, but if you want to take the money out, 2%. Your referral fee is 2%. Okay. But I will recommend you to become my partner because when you are trying to talk to your client will say, are you investing? Yes, you do. No matter if you are putting 55,000 or not, you automatically you are eligible to invest, to roll in your referral fee. So when you roll in your referral fee for 3%, so this is the number. 16,500. So that is the general commission when you sell a $550,000 house, right? But you have to understand when you are getting the deal done, no more deal, right? When you close the 3% 165, unless you put in the stock market or you put in the investment. Otherwise, the money won't grow. Am I right? So this one, your money grow. And also this one, you don't need to share with me 12% out of my, you don't need to share me 12%. This is like it's better than your client because actually you share my share. You are sharing my interest. So that's meaning I took 3% out of my 12% pocket to benefit you. So doing that, you can see the rental income side is 89.10. So you are going to over time annually, you can get like a 10.8% based on that, 16 based on that number. So that's over time is 10.80%. But here we want to share with you, this one is based on the is based on 16,500. So the annually return is like that. This is a fix. Okay, but if you look at equity, you are not eligible for this class A. You are not eligible to have equity, no equity. Okay, so at the end, you still get 25,410. That's meaning 8,900 plus 16,500 together is 25,410. So it's better than 3% already. That's out of 4.62 is 25,000 divided by 550. So your commission is 4.6%. But if you have a chance to do this is for you, only refer one is $550,000, injection. But if you say you do a cake style, just like a Carlos did, look at that. You got a sweatshirt for 11,000 because your people, they pay 55,000. They need to give you something. So they give you 2%. That's your cash return. You don't roll in. You get a cash return right away. Okay? Then those 2%, every single penny they get, they have to give you 2%. So go all the way down. Look at that. You get 2.95% out of the $550,000 junior partnership. So together, you are making 7.57% rather than your 3%. Okay, so the difference is, hey, I don't care how much I just want to make a commission. So I don't care how much that are they going to roll. That's meaning you get 11,000. That's 2% of the commission at the time. And then you let the money sit there. Wait. Once everything done, you got 7.57%. This is your class A. But look at the class B. That is more interesting. Okay, this is class B. The equity side, you will be benefit. So the rental side, you didn't get that much. And then go all the way down. Look at that. Your referral earning is a 6.62%. If you only refer one people for $550,000, you are making 6.62% commission. Okay? But if you are having the sway share of the junior partnership, go all the way down. Look at that. You still get your $11,000 in cash. Then you keep rolling, go all the way down and get an equity. Together you make, 10.75. Sorry, this is wrong. 10.75%. So that's your commission.
So is there equity on this side or not?
Yes.
There's
Yes, this one you will be benefit with the equity. Yeah, so that's why I think that's how we make our title, our subject, it makes sense right now.
I don't understand the difference between A and B.
A, I pay you, we guarantee you every year I give you 6%. It's kind of like a loan,
Okay,
but you don't get equity.
so I'm saying on the commission side. on the
Which
commission,
commission?
Also commission every year on the class A, you pay the commission every year.
No, this is like a dividend return. It's not commission.
Right.
You are rolling, okay, once you do the referral, everything's done. Right? Then your money won't pull out. If you pull out, you only get 2%. If you don't pull out, it's 3%. Right? So you do 3% all the way down. And then because this, you are participating 6%, fixed income, fixed returns program. So that's how it goes. And then you are not going to get equity at all. Okay. And then we will buy you back. We guarantee buy you back. Because when I buy you back, I get another 50% to myself. Okay, so you can be the sponsor for that as well, And then for the sweatshirt, so for the second part is when you are buying a piece of pie and chop into, 10 pieces. So then you get charged for your investor. Everybody pay you 2%. So that's the number.
That's why
Yeah.
when people saying the 57,000.
Yeah.
Yes, right. So
And in that one, it's 57,000, of which 57,000, that includes $10,000 on reserves. And then it also includes a small acquisition fee, which is for me. And that's separate from
that's a 2%. I put there a 2%.
2% distribution.
Oh, separate from the 2%.
No, that is I put the structure a little bit different, but I can discuss with you. But however, think about that. Your client, a lot of clients, they might have a $50,000, $60,000 in their bank doing nothing. And then it's easier for you. When you see some of the property have like a BTSA, where you go, yes. And this one is kind of planned for your own finance as well, because this, and you will say, okay, Josie, what is the risk? Then we can go from that side. Okay, but you saw the property. Actually, the property actually is in, we are kind of like a shadow by HMAR. We are kind of shadowed by, we are kind of shadowed by HMAR. We are shadowed by University of Houston. So actually that's a very, very strong project. Okay. And so I want to share with you, this is and I have a more of the project that I have a lot going on. And that can make you uniqueness. And I want to share with you, if you look at more of the agents, for example, you are the residential agent, what you will do next? Probably you feel like, oh, this is a good deal. I can flip the property. So that is meaning you want to go into the principal side because the icing is not going to satisfy you anymore. And you need to utilize your knowledge to get more benefit. And this one, because the project is big. And also, it's not easy to find. So I want to share this opportunity to you, and then you can think about that, how we can structure that. And we have the best person here. He actually do a lot of due diligence already. So I can share with you, and then you can talk to your client, say, I'm going to share you with this opportunity and see what they thought. And once you form that type of like a, junior partnership, yes, you have a really good connection and glue with your client. Because in the future, they will check with you what's going on, right? But you are charging 2%. So you are more than happy to answer. But when you are buying a property, they have a rental property, and then you never get their passive income. They still call you. Are you answering? Yes, you have to. So I'm saying if you have a benefit, that's meaning we are glued together. And that is a good thing to utilize your own skill. Because you are very good salesperson with knowledge. And this is good for you to start to think about how to go to different level.
So we had someone from Zoom ask, do you have to be a accredited investor? Yes or no, or what?
This one, I think junior is fine, because this is 55,000 only. Yeah,
I have a question.
yes,
So, so what if the investor,
mhm.
somehow they have to break the contract like before, the 5 years. So what is the penalty?
There's no penalty. They are, okay, when you talk to your client, you have to understand they are not lending us money. They are getting to the business. They, just like you invest, you co-op with other people to buy, co-op with other people to do the, to do a restaurant. You say, can I withdraw my share? Yes. Then I will ask you, hey, Tom, can you buy my share? That's the way they can do. Just like you are buying stock. So also, when you talk to your client, they have to be able to, even we are not talking about credit investor, we still need to know their background, because this is private placement. We don't want to deal with somebody we don't know.
Yeah.
That's the enclosed circle. And once everything done right, we will keep doing it. I will have a more project to you, and then also that's the way you can keep the good relations with your client as well. Otherwise, you have to keep sending out, hey, your birthday, so happy birthday, yeah, Christmas. That is different, This, you really have the real benefit tie each other.
So in this case, to avoid that credit to the investor, it has to be more like a friends and family,
Yes,
and without announcing it to the world that you're putting.
we cannot do publish. No, this is a private.
Always we have to prepare for some question that we have.
I do have a lot of questions. Anybody have a questions? We have a Q&A.
And also, can we have this PowerPoint to,
This is actually, this one is for you guys to understand how you can become a principal to make more money rather than become a listing agent or buyer's agent to get the icing only. But if you need to have a more idea, you can communicate. I'm going to stay in Dallas until Saturday. So if you want to talk with me again, or you have somebody you say I want you to meet, then I'm fine. I can talk to you more. And also, we have the best partner here. He knows how to form a junior partnership. So he can help you guys.
I can have another, so with the holidays, I couldn't do enough of these, but I want to do another Zoom. I've done a few of them already. I can do another Zoom maybe in the next week or 2 weeks, where I can explain the entire project, just specific to the project with all the numbers, so that everybody can see. And then I'm gonna also analyze what Josie's proposing today, also without the equity side of it. I need to look into it, and maybe I can figure out how to present it to you guys also numbers wise, so you can see exactly what it would look like as well.
Okay. There's a Q&A I prepare here, and then this one, for example, what is an equity partnership, a favorable real estate investment vehicle? And I show this to you. And so you need to digest it. This is kind of like your knowledge in your mind. And what is the initiated? And what is the acquisition price, formal negotiable? Why this property is a good opportunity? I have all the Q&A out there. So, and the good thing is the project is navigated by my, experience and professionalism in the past years. And now I'm still, I'm the HOA president out there. So I pretty much control the market out there. So that's how you won't get damaged, because if you go to see like a small project, the neighborhood, they probably build smaller one, but for this side, they are restricted. The land is restricted. And also the highway won't go. The highway won't reroute. The college won't, relocate. So that is your strong point. And how many times you can find this type of a commercial property? Barely. Okay, so that's why I want to see if and honestly, my intention is I want to share this opportunity to all of our partners. And in the future, besides your buying and sell, you have your own niche. You can talk to people. And also you are going to get into the different level because you need to understand the project. So instead of a taxi driver, I want you to be a limo driver instead, right?
Yeah.
We don't want to be on call anytime. Yeah, you're a pilot, I know. So he is the best one, so that's the difference.
So how did you project the earnings to be done?
Okay, the projection of the earning, there's a two-part. We are not projected. For example, we are talking about for example, we cannot really project about here. I'm sorry, this is Chinese. Let me show you. We cannot really project about the property of how can I say? We cannot project like a residential return, but we can project commercial return, just like what I say to you, because 15 units are all lease with the contract signed. So those are part of my projection out there. And then also for the equity part, actually why we project the equity part, because based on the, NOI and cap rate. So based on the NOI and cap rate, we can come up with the market value. And also we will do like a cash out, and if we do cash out, I don't need you to do cash out for me. I don't need you to sign. Actually, it's on me. If you want to cash out your residential property, you need to be qualified for that amount of a loan. But for this, you don't need to, because that is on the general partner side. Yeah.
Josie,
Mm.
I have to go, so I don't know if anybody has any more questions for me.
He can schedule some time with everybody. Anyway, any question? Do you see this kind of interesting? Okay, go ahead.
So you took the lease, you try to secure the lease for the one that.
We already have a lease signed.
For the one that's about to be developed.
The about developed one, we actually have a couple of LOI are working on. But if I have the signed lease, you need to pay more. But these two pieces are jam in the neighborhood because there's no more past that. Right now, we are working with the California's big, like a Japanese chain store. And also we have a couple, because those two pieces are the last piece for the location.
But right now it's already almost full. You already have one.
Yes, we probably have like a 60% of the LOI already.
So
Yeah.
no more, are you interested?
That is not, okay, that is not something, because for example, if you want to have like a fully leased project, you probably only can get about like a 6% of a return. But if you have a ground up, you will get more, much more. So right now, your worry, it's my worry as well. And also you have to understand, you are inviting your client to join an opportunity, not selling them something.
No, I have a customer that wants to lease.
Well, you can share with me because we are still pick and choose. Yeah.
So you're looking for branded,
No tea shop. I can tell you right away. I don't do tea shop anymore.
Do you have a PPT like this to, we can present to clients?
We have the what is that? We have the like a investment deck. Yeah, I can share with you. So, but I think this need your time to understand more. So today I give you this, Daniel, print out. So I want you to digest, and if you really think we need to sit down and talk or any kind of like the call again, and I can do that and I send it to you. Or I won't think this is good for you to present it because you won't be able to present thoroughly like me. So you can call a Zoom meeting and then invite your client, but you have to do the fundamental, introduction. And let me answer all the questions because all the numbers are done by me and all the details, because this location I did from ground up. So I know this case inside out. Got it?
So when you first developed the current dating agent, how long did it get to where you are now?
Huh?
When did you start?
Oh, this one, we start to release from the end of the 2016. Yeah. Yeah, and the property complete at the 2017, the year end. But we survive, we never shut down for one day in Katy Asian Town.
But it's already gone up. What's the investment for?
This one actually is under I have my entity to carry this one already. But the intention for me for finding another entity is I want to open more opportunity to a new investor. Also help my first basis investor to move on to different project. But honestly, usually when you are doing commercial property, you are on the market and then you will look at like a 6% cap, 7% cap. Those are the people doing the same thing like me, but the difference is I'm having A and B company and I form C company to acquire them. So I want to create a win-win solution. That's why I put 12% of the split only. Got it? Okay. Any more question? Or, you feel free to let me know if you want to learn more. But this actually is good for you to start to think about the different level. Yeah.
So that 12% split is gonna be after the projected ROI, is that what you're saying?
No, the projected ROI is 106. That is after split.
Okay.
That is after split. Because I need to get paid to do this, right? And I'm liable for the $10 million of loan, right? So that's why. Okay,
Can I have a copy of a Q&A?
Q&A. We can send it Q&A.
Email?
We can email to you. Okay, you just you want me
Yeah,
to,
just give her your card and information.
or you want to, yeah.
Hey, just real quick, I just want to be clear that if I can bring in 10 junior partners.
Mhm.
The 57,000 per investments.
Mhm.
I can, charge a 2% management fee for the 10
Yes,
investors,
yes,
right?
yes.
And if I can't bring 10, that it will be.
We can, for example, Gabriel have a 5, you have a 5, you guys can split.
Okay.
We can help to format.
Okay.
Yeah,
What I'm trying to say is that otherwise, if you don't have a 10, then we get a referral fee.
yes, you
Right.
can do this. Thank you.
What is that referral fee like that?
I told you, the referral fee is 2% for cash portion. 3%. If you don't take the cash portion, is running to the investment. But if you don't form your own junior partnership, the 2% afterwards, management fee, you shouldn't have it.
Uh,
Yeah,
Okay, thank you.
Yeah. okay,
Thank you.
no problem. Thank you.